The next important factor is portfolio diversification and monitoring. Even after evaluating investment grade stock, based on our knowledge and the informations, there could be unknown factors which we could not verify or induced after our evaluation. So, it is very essential to monitor the portfolio continuously to identify any adverse impact on the any development of the stock like news, event, policies, economical factors, the micro factor, the micro factor, the macro factors. So based on these things, you need to identify and analyze the impact of these various parameters on your stock. If any of this event or news or any policies are impacting the stock negatively, and for a longer term the impact will remain there, that will be the important point one need to consider, whether you need to be invested in that stock or you can come out of that stock based on your decision and based on the whole perspective you look around from, or the impact of that event, news, or any policies for that matter on your stock. This monitoring helps you to cut the losses in your portfolio as early as possible. Rather, by not monitoring the stock may come down to a very low level where there is no way, or you will take a substantial loss in that case. So from that point of view, for protecting your capital, it is very important to monitor the portfolio. Second thing is diversification. Stock diversification is an effective way to migrate the portfolio risk. Some consideration while diversification are: too much diversification is also counterproductivity, but diversification across certain industry, diversification based on large cap, mid cap. So there is various ways one can diversifies across the sector, across the industry, small cap, mid cap, large cap. So this diversification helps in a way that even after doing your homework for lot of stock, as I mentioned earlier, even if you do the homework, there could be some information which you are not aware of or which you may not able to track, and unfortunately if that stock impacts you, if that information impacts on the stock heavily on the negative side, and your exposure to that stock, your portfolio is very high, so that will erode the capital substantially. So to avoid that, it is always important while making the portfolio that you diversify across various sector, across various stocks, and based on the market cap, the size of the or size of the stock, or size of the business, market capital of the business. So that is what the stock diversification is effective. Okay, guys. All right. Thank you.